following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good to be back here. And got a couple of things to announce first. Economic calendar, durable goods, 8:30. Going to look at the notes intra show because of that. Probably not a big deal. Consumer confidence at 10 a.m. That's going to be a big deal in my opinion because the FOMC meeting next 2 days, who knows what they're going to say? Who knows what they're bound to say by the administration, of course. And who knows what they're bound to say to keep the stock market going straight north. Got a little edge there. State Street investor confidence at 10. Don't know how much of a pull that's going to be, but State Street, man, good organization. Up in Boston, Tom, gotta love it. We're going to take a look at crude oil really quick. Apple's actually coming out with some impacting news today too, so we're going to chat about that a little bit. They're expected to announce some not damning news, but first year revenue drop possibility in 13 years. I'll tell you what, let's take a look at Apple first. Let's take a look at crude oil. How about that? I'm really mixed up this morning. Here we go. So here's that June contract, and here's that close above. There's the big inflection point, 42.06. This week we've had a pullback to 42.50. So just the fact that this thing is not doing a key reversal type bleh, and rattling around, consolidating above this kind of breakout for the first time on crude oil, and hate to beat a dead horse, but you guys have been involved with this move down, mentally at least, since about 100 or the low 90s, that breakdown. I think it was around 100. 92. Starting to listen to David White. I love listening to David's show, by the way. I learn something every time I listen to it. It's an incredible show, actually. Does a lot of preparing for the show, research, tidbits that I had no idea. And we're going to take a look. We're going to take a look at crude oil on the daily. So remember that 42.06, 41.75, really good support on this thing. I'd love to see this thing kind of spin around now that we got that weekly close last week above this area, and then kind of be able to look at this playing defense on the long side. Remember, we've got to be willing to kind of change our tone here. And when we have a technical breakout, as it was back in the mid-60s, kind of failed, new profile, thin profile, breakdown again. We just got to look at this as for what it's worth. I mean, this is technical damage, and we're going to run with it. So that's the deal there. Before we hit Apple, let's just take a look at a couple of the bellwethers of the commodity world. The golds, again, this reversal back below 1242, 1243, just kind of seemingly wanting to stay below there, somewhat dollar related. And we're going to take a look at silver really quick, the May contract. This is, if you're trading silver, you obviously got the breakout and not a lot of retracement back into that breakout area on the long-term profiles. But here's the daily. You got a new profile yesterday. This is support now on the silver. And again, these support areas are pretty cool. 16,643. That's support now in silver. And then you've got even bigger support down at 16,105. But remember, if that starts breaching into this balanced area on silver, you might get a hint of a new profile attempting to appear on our weekly, which is all in the scanner, by the way. And then Monday morning, you will see some locked in, definite new long-term inflection points. So it's up to you kind of what time frame you want to operate on here. All right. Natural gas, we're going to hit that again really quick. And where is it at? Here's the June contract. Actually, is that the front month? Yeah, May is the front month. I think John from Philadelphia asked us to look at June. I'm seeing May as the front month here. So again, natural gas, we talked about, where's the buy points on the May contract? We've got 1.991. Roll to June. I've been instructed to roll to June by John from Philadelphia, and we're going to do that. Two weeks ago. All right, well, e-signal's showing the front month as and the continuous contract index to May. I'll look into that. John from Philadelphia is usually correct, so I'm going to take that at face value, Johnny. All right, here's the weekly. On the May contract, similar inflection points relative to the price action. I just want you guys to know that. So it's not, and again, the profiles are kind of on a relative scale on these contracts, pretty accurate. Here's the 2.072 big time weekly inflection point. You've got a hint of a new profile trying to appear maybe tomorrow. This is all in the scanner. 2.114 intermediate support, and then you've got that big support area 2.072. So guys who are trading natural gas, in my opinion, you might have a little bit of a collection area down here in this DMZ, but you got to be willing to kind of call it quits at some point if we're wrong on the pullback. And I think, again, you're in trading, it's in a kind of a trend sea change event, which may be the case here. Again, dollar might help this situation if it heads lower, of course. And you can look at that relative relationship a little bit. It might have some impact on this, but backing and filling is part of that trend. Backing and filling. See, I was way ahead of you, John. I'm reviewing ahead of time. Awesome. All right, let's take a look at November beans. I want you guys to kind of look at this. I took a walk with a friend of mine, and who's in the grain business. It actually wasn't McLean Bryce, who we talked with in 38-degree weather that morning in front of the river down East North Carolina. He was like, why didn't you tell me to buy beans on the breakout above 915, and especially buy the retracement on the November beans at 915? I could have made my whole year. He's a big fan of trading options when it comes to these grains, and he didn't do anything, personally speaking, on his personal account. So he was like, well, what do I do now? So I told him during the walk we had to wait for a new profile to appear so you can actually look at some new support areas. We're going to talk about this a little bit more and how these types of moves may act. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We were talking about November beans here. I just want to show you, look, one of the things I was talking to my buddy when we were walking around is, you know, when you have these types of moves, and again, we talk about this a lot on the show, you got to have somewhere to play defense. You got to have somewhere to pick the battles. So when you're in the ionosphere up here with beans breaking out from that 915, that was the daily, and here's the weekly. And not a lot of, you know, reasons on the long term to take this off. But again, guys who are trying to get into this trade, you got to have a couple of things in mind when you're looking at situations like this. You're thinking, or I'm thinking, and Larry will kind of tell you the phases next hour. He's been through a lot of battles when it comes to runaway trains and what happens in Chicago and grain situations and things like that and the psychology around them. You can obviously have these run-ups and just massive turnarounds, and, you know, we could actually, you know, it's at all possible to come back into that balanced area on that weekly from before. That's definitely possible. But a lot of times you'll get these moves and people will start shorting it early for no reason, without any technical reasons, especially when it comes to profiles. They may have gotten hurt and they're looking for a place to get out of the trade. All right. This is the first chance that they've had a chance to get out of this trade. We were up in, and I'm going to walk through this for you, 1023.5. We reached on the November beans, and when it pulls back 50, 60 cents a bushel down into, and we've got a new profile, and we had that yellow peel back happening, they're thinking, oh my God, I shorted this thing at 920, finally got a pullback. They're a little stressed out because they've got to figure, should I take the loss now and get out of the trade, lick my wounds, or should I try to double up, hang on to it? Well, you've got a lot of people covering that short position who happen to be on the wrong side. This doesn't happen like this all the time, but when you've got a profile that appears and you've got a new support area, you've got a couple of things in your favor in these types of scenarios. And I'm just talking about historical, seen this movie before type things. So yesterday we were talking about 978, and what did we get a bounce up into? 1012. I like this. All right. Excuse me. And this is, again, a little bit of a education on, when you have volatile situations, give yourself a little bit of room to be wrong when you're entering these trades. The volatility's there. It's not going to be to the tick, but let's take a look at this. The low was 976 and a quarter. That inflection point is 978. All right, so a point and a quarter, or excuse me, a cent and a quarter a bushel is not a lot of noise to the tick on this 978, and you can see what happens. So again, let the market, a couple of things in play here. A lot of shorts that needed to cover. Let the market come to you. Play the game, play the odds, and this is kind of par for the course. Turn the rents the same way. We talk about that all the time, and just being able to pick a battle at a certain area. Now, when I go into the scanner, I think we've got the July contract up right now in the future section, but it was a similar situation. I'm going to show you. There's beans. There's that inflection point on the July. Here's the daily. There it is. As you can see, and we're going to pull this up. There's the daily on the July contract. I think that's the July contract. Yeah, let me make sure. Yeah. And it kind of looks like magic, but it's just, again, playing the odds. I'm going to pull up the, if John from Philadelphia will allow me, I will pull up the July contract, even though the November contract's kind of where it's at. And here's the July contract. We reached the low yesterday at 986 and a quarter. That unfair high is 985 rounded off. So again, similar situation. No comments. Kind of powerful stuff. Thanks, Johnny. If you want to call in and speak about this, I'd love to get your opinion on where these things might be headed and if the trade might be over for a while. So I'm all ears, and we love hearing from you. Here's the note trade. Again, you got a FOMC kind of switching gears over to treasuries. You got an FOMC thing going on the next 2 days. God knows what they're going to say. You've had the market completely come to you again on this 129.02. We've reached a low today. It looks like 129.05. So in that neighborhood, remember long-term inflection points on the weeklies, and these are all in the scanner. You got to be able to, and I'm going to show you something really cool. Let's go into the scanner. Here we go. I'm going to repost this because I have a tendency of losing the chart. Let me tell some. All right, as I get into the 10-year, you can see that bottom right there. And that means we're at the, again, pulling this up. This is the level of the market right here, and we're right near that 129.06. We just, not 129.06. This is in decimal form. You're going to have to convert that to fractions. But you get the picture. We're right there. So if you were looking for pullbacks on treasuries or looking for a place to pick a battle, you kind of got one now. Again, I don't know what they're going to say. It could be dovish. That could drive the market up if it's dovish. The broad stock market. So we're kind of in a little bit of a quandary there. We're going to talk about that a little bit further and that relationship. Yeah, we'll find out what Obama told Yellen to do. I completely agree with that statement, Terry. Fully agree. All right, we've talked about gold, 10-year. I'm doing my hand like this. I feel like Ted Cruz. He's always pausing and looking around and doing this. It's seemingly not that effective, though. All right, talked about silver, gold, crude, treasuries. We're going to talk about some stocks after this, but I just want to cover the bases here. I want to look at the XLE really quick because, again, very crude oil related. Had the close above, kind of continuation here on the XLE. It's kind of sitting up here. We're going to possibly get a new inflection point to pay attention to. Very eerily looking like crude oil, but a little bit more outperformish looking. That's the situation in the XLE. We're going to look at some XLE stocks a little bit later. And again, you might be going, why do you always look at XLE stocks? Why do you do this? Try to figure out where some edge is relative to sectors, underlying commodity related to that sector, blah, blah, blah. And a lot of times, you can play defense super good by taking that train of thought. We're going to be right back, guys. We're going to hit a couple indices, and then we're going to get into some individual stocks like Apple. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Here's the dollar June contract. We had that hint of a new profile. Let me pull our chart back up here really quick. Here we go. I apologize for that. Sometimes when I switch screens or server remote connections, we'll get a loss of chart. Here we go. Dollar. Talked about that new profile last week. Yellow, ending up on a yellow peel back. This is all in the scanner. I'm looking at the scanner. That would have been that yellow peel back there. And here we go. And I'm showing the visuals on E-signal here. 94, $128 unfair low on the weekly. So how do you trade this? Here's the daily. There's 93.11, or excuse me, 93.91 down below. I don't know, how this FOMC meeting the next 2 days is going to affect this. It might be, something to really just kind of monitor and not trade and see how other instruments act relative to some dollar moves. I feel like without question, you're going to have this thing kind of bounce around based on the rhetoric and obviously the rates, the 30-year, the 10-year. So this is something I think is kind of a monitoring deal, maybe not a trading situation. But again, you've got an inflection point, let the market come to you type thing down at 94.12 down into that 93.91 we just spoke of on the daily. That's going to be big support. So we're interested in how that's acting. Shanghai rallied a little bit yesterday, nothing to write home on. Just taking a look overseas. Nikkei, here's this situation on the Nikkei. Talked about, again, kind of not exactly similar to the bean trade, but when you have these powerful moves, you want to try to let the market come to you. So again, it's the situation 17,331 inflection point on the Nikkei. You got the BOJ again speaking next day or two. Again, going to be a lot of volatility relative to those fundamental announcements. So, might be time to kind of look at the things that are immediately going to be affected and then try to find opportunities, anomalies that are going on relative to those things that are immediately being affected. We're going to take a look at Apple really quick, and we're going to talk about some currencies in a second. RJP, we're going to look at the British pound. I've been staying away from that just because of the Brexit thing that could skyrocket or cave it in at any moment. Here's Apple. Last week we talked about this 104 inflection point here. We got as low as 104.62. We closed a little bit higher. New profile this week. This is our weekly on Apple, and we're sitting kind of smack dab in the middle. So I'm kind of looking at this, and we've reached a low this week of 104.51. So that previous profile, which actually was connected to a former profile around 104.29. This floor literally was in force since the beginning of September last year, right? This is a big, powerful support area. Again, former support, now resistance. We've already looked at that, but this is a big area, 104, without question. But you've got a new, smaller profile now on the long term, and you've got a big announcement today, and God knows how this is going to work out. I mean, you do not know how the market's going to react to good news or bad news to that particular fundamental news. So I think this is kind of a wait and see. You've got new inflection points to buy the dip or sell the rally here. Very wide, 99.80, 110.82. These are all sitting right here in the scanner. Yeah, expectations do seem low for Apple today. It's almost like, the stock. Yeah, I mean, stock's acting relatively well, I might add, for the consensus that they're going to announce something not that great. So they've got to actually announce something terrible. Looking at this, trying to block out one side of the marketplace, and you're in the middle of a weekly profile, and you've got a big announcement, and in my opinion, need to wait. But here's Apple, and let's. When the scanner, by the way, when it kind of just kind of stays static for a while, it's actually uploading a lot of data or downloading a lot of data to populate everything again from our servers. That's just the way we have it operating. Here's Apple. There's that 99.80. There's that 110.82 there. And here's the inflection points here. Okay. There it is. There it is. All right, so let's go back to the daily on Apple, and let's pull up the chart. So here's the daily. Obviously, we've had some opportunities getting back down below 108.54 And we talked about that, where you could play defense down into 104 and some change. That's already happened. Right now, it's just a wait and see. If you want to roll the dice, I think one of the things that Terry said is, the expectations are very low. Rolling the dice put a gun to my head. I'd probably want to be long this, but again, me personally, I would never roll the dice before these announcements. Again, anything can happen, and the good news is you've got. Let me repost my chart again to make sure we have it. The good news is you've got some killer inflection points here. This thing could really rattle around after the announcement, and if you're a day trader, I think you've got some good envelopes to pay attention to there. A couple of stocks that were in the news from Monday's earnings. Just want to examine these so you guys can kind of get a bearing on Laboratory Corp. I got to pull that up because I'm pretty sure it's based out of Research Triangle in North Carolina. Here we go. Yeah, decent action on the north side. Here's again, classical technical analysis kind of, move up, consolidation. I don't know if you can call that a flag or a pennant, but we were trading above profiles here. And now this is our weekly, and this is where we're at. And how do you trade this now? So here's the closing action yesterday. Closed a little bit lower than where it opened. We're going to have to take a look at that again and wait for some new profiles now. There's no real reason to short it or go long. Just want you to kind of understand my train of thought on things like that. Let's take a look also at TCS. Here we go. A really cheap stock, and looks like it's trading pre-market. Got prints going on. Not printing yet. After post-market 707. So it's kind of like, SWN in a sense. We've finally closed above profiles for the first time in God knows when. Yeah, this is, and see how these things act. See how awesome they are to have these inflection points in place to trade breakdown. So now, for the first time in, good gracious, when is this? Yeah, as far as I can go back. First time you've had a break in profiles in the long term. You broke above 646. That's going to be support now. If you're looking to trade a relatively cheap stock and trade the action, got support at 6.46 now. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Going to look at the British pound really quick. Had a request in a den about that. Here's the weekly. Oh man, I messed up my chart again. Let me get this aligned properly. Here we go. All right, so here's the weekly, and I've been a fan of not even looking at this because the underlying fundamental impact of news stories coming out from the June meeting about Brexit. If you guys don't know about that, just look it up. This is technically pretty cool that it's actually starting to break above profiles again with that support at 144.47. But again, I think this, and that's pretty coincidental with the daily unfair highs here. But again, I don't really think this is something. It's maybe a small amount of money on something like this just to play around with on the volatility side. But if you're thinking about shorting it, you don't have anything to kind of lean against at this stage. And there's no pullbacks going on yet on the long trade. So I think we're just a little premature on trying to buy pullbacks here or trying to get into a long trade, and there's nothing to lean on the short side. So I kind of consider this a no trade. And remember, there's about a zillion other instruments to trade out there that might be showing some hints of being near inflection points where we can kind of play defense against. And you just don't have anything to play defense against either way on the British pound right now. So, and all these inflection points that I just spoke of, again, are in the scanner. Go to the Forex section. Got a cool little area of this that has some major currencies. By the way, the emerging market currencies or foreign exchange, that conference that I went to in London a while back, that in my opinion, that's going to really be the new wild, wild west that is going to, they've got market makers now coming into that scene more so where it's not just the Zimbabwe whatever crossed with the Mongolian whatever, and there's just no liquidity, and it's two banks way apart doing side deals on the phone. There's actually market makers coming into those markets now to provide some liquidity, albeit on a very small scale. But that's going to be something interesting if you want to look into that. I think there's a product called RX5 or RJ5. I can't remember it. It's a new charting package that is providing a venue for guys to come in and make markets on those very illiquid or traditionally very illiquid emerging market Forex products. You ought to look into it. It's kind of interesting what's going on there. I was asked to speak there and had no idea all the things that were going on underlying that situation. Canadian dollar, again, continuing to become valued. I think just the fact that crude oil is stabilizing at bare minimum is just a relief to this entire country. So that might, my trip to Quebec City has been put on hold now. As we look at the British pound in here, I want to pull this up. Where are we at? Just on the scanner. This is what I was talking about before. Here's cell structure is green across the board. Nothing to really hang on to. If I'm looking down these, kind of looking at this thing like the Matrix, I'm going to look at this and definitely tell myself that it is impossible to short this right now. The short side of the marketplace has been blocked out. So, who asked about the British pound? RJP, yeah. Block out the short side. Let's take a look at the ETFs really quick. I'm going to pull these up in a chart first, and we're going to go back to the ETF sector here. Here's the XLF. This is one, obviously, that's going to be just completely watching what's going on with the FOMC comments the next day or two. You got support now at 23.10 on this. Where do I think the broad market's going? We've talked about that. We talked about a little bit of a hedged play. Let's go back to that really quick before we get into the ETFs, just so I can reference this for you. Here's that big inflection point. We've come off this week all the way down into all the way down. This is the magnitude of all the way down in the S&Ps right now. A low of 2071 off of that 2096, and now we're just kind of compressing up into it again. Here's the daily. We've got that inflection point at 2097 on the daily. So, that's where you play defense if you're going to be shorting. But again, looking like it wants to compress and crowd this. I mean, I think it's a snowball's chance in hell that Yellen would come out and say, you know what, this has gone on long enough. We've done what we needed to do to fudge all the numbers and ramp up the stock market. We're gonna raise rates a half a point or 50 basis points. That's not going to happen no matter what they've done in the past. So you've got to keep that in mind, that they're not going to disturb, fundamentally speaking, the stock market going straight up. Our debt is over 20 trillion. I read China's debt is like 237% of their GDP. So I guess now that's our excuse. Hey, we're not that bad off yet. I don't know. This is going to end terribly at some point. But as a trader, you got to just keep going with the flow sometimes, as maddening as it is. Okay, let's take a look at another stock that has had earnings. We want to just kind of reference. We're going to come back to the ETFs in just a second. Barnes Group. Again, don't have any prints this morning yet. This is the action. 36.53, 36.41. I actually like this a lot. I like how it's kind of closed above and come back and retested, especially after the earnings. That's the weekly. Here's the daily, holding up still. That weekly on for high, daily on for low. Might be a little bit of a trading opportunity on this one for, up into at least the 37.43 on the long side, especially if the market gives it some help. So let's go back to the ETFs really quick. We looked at the financials. We talked about that a little bit. We talked about the XLE. Let's look at the XLU that I got burned on. Here's the cliff that it fell off of, 48.44. That coincided with that daily unfair low, 48. I think that was 48.50 something. Let me check. 48.47. Let's just call it 48.50. So the 10-year kind of helped this process. The thirst for yield on the utilities kind of got scared off here without question. And we talked about that. This is where you got to play defense if the 10-year breaks. 46.04, still that big magical number down below. No leverage here on the XLU. So therefore, we can't really drill into the XLU stocks yet and try to find the strong of the strong to buy or the weak of the weak to sell. So I'm going to repost my chart here. And guys, we're going to go to our last break, and we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We're looking at Xerox, and I hope you're seeing my chart. This is a prime example. This is an earnings-related incident, I'll call it. Not printing yet this morning. This is kind of a prime example of why I don't roll the dice before earnings. And again, this could be an Apple situation. Anything can happen. I mean, you know, these are things where you have these type of moves, and then you're not trading anymore. Then you're trying to. I mean, I've done it. Trust me, I'm telling you things that, you know, what did Larry say? A smart man learns from his own mistakes. A wise man learns from other people's mistakes. Here we go. Then you're trying to double down, get the money back, blah, blah, blah. There's all kinds of crazy things that can go through your head when something happens like this, when you're already in something the wrong way. So earnings, fundamental announcements that you know are coming, might not be a bad idea to stay away from them. Until, we always talk about letting the market come to us too. We will ultimately, just on Xerox, we will ultimately get a new profile. And then, guess what? We have a chance to play defense if we're wrong. Now, this thing could be in free fall down to $2. You never know. I never understood how Xerox stayed in business, but I'm going to shut up now. All right, so going back to the currencies really quick. I wanted to cover the euro. This is something, you know, the Australian dollar, still nothing really in the way here. Here's the Australian dollar. Here's the the profiles. If you want to pay attention to that POC, that's great. I'm looking for any place to buy support for this thing all the way up into the 80s. So here's the daily profiles. Big numbers 7608, 09, up top 78,351. Right in the middle of a profile right now. We've had really good opportunities to buy support and stay in the long trade and leave some contracts on to let it breathe. We've been talking about that for a while. But again, I want you to look at this. That yellow peel back happens on the Australian dollar. New profile subsequently appears. We haven't explored the entire fair auction. We could. And if we start getting a little lower here, and you should have taken some off based on that alone, not reverse the position. Remember, that's kind of a target-rich type thing. We might have a new weekly start to show it a hint of wanting to produce a new profile. So I think this is a wait and see now. Obviously, you can trade off that POC there, but again, that's the situation on the Aussie dollar. Here we go. Here's the euro. I want to just point this out. I was a little disturbed that this thing really didn't follow through at all. I've been bearish on the euro forever, and I'm mad at myself for looking at this from the long side ever. But when we started getting closes above 113.52, started looking kind of attractive. Then, all bets are off, blah, blah, blah. So here's a new weekly profile, 114.64.65 up top. But now you've got an inflection point here that you've rallied back up into at 113.116. So how do you trade this? I don't see a lot of leverage with this yet. We're obviously breaking above here on the 240s, but remember, longer term takes precedence over intermediate, over short term, and you've got some pretty serious resistance here on the daily to possibly start exploring the entire fair auction down before. A lot of times, if you look back in time, remember, folks, a lot of times these fair auctions are completely explored. Stay tuned for Larry. If you've never watched him, you're in for a treat. Stay tuned to TFNN all day, guys. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.